In this video, we're going to look at a couple of popular candlestick reversal patterns. We're going to take a look at the piercing pattern and dark cloud cover. Hello, I'm David Jones. This is the latest step in our technical analysis and trading strategy course with Trading 212. Now, over the last couple of weeks, we've started looking at the idea of candlestick charts, and last time around, we looked at, well, I think a couple of good signals, the idea of bullish and bearish engulfing, where a candle engulfs the previous day's candle. It can be a sign that maybe sentiment is changing. We're going to expand on that this week. We're going to look at a variation on this pattern, and it's the idea of dark cloud cover and the piercing pattern. Similar sort of setup. Again, it suggests that maybe a trend is reversing. So as usual, first of all, let's take a look at the theory and how it looks in the textbooks. Remind ourselves what we did last time round when we were looking at candlesticks. So last time round I was talking about engulfing patterns. So if we have a market that's going up, then we have a candlestick, a down candlestick that engulfs the previous day, that can be a sign the uptrend is running out of steam. And the flip side of that, when the market sells off, we have a down day here, all still looks very negative, but then we get a day that turns around, and we have a bullish, an up day that engulfs the previous day's candlestick. That's known as bullish engulfing. So bearish engulfing up here, bullish engulfing down here. So what we're going to look at this week, these two other patterns, dark cloud cover and the piercing pattern. Let me just draw them in. So here we go. I think the best way of describing these are not quite engulfing patterns. So up here, up at the top, this is known as dark cloud cover. So what happens is the market is trending higher. We've got an up candlestick there, everything's still positive. But then we get, if we assume this is a day, we get a day where the market does turn around and pushes through at least 50% of the previous candle's body. So it doesn't go down there and engulf it, but it pushes through at least half of the previous day's open to close range. That's the dark cloud cover. So again, it's a suggestion that maybe the strength is running out of steam. Then down here is the flip side. The market has been trending lower, got a down day, then we have a day that goes up, and again, it doesn't quite engulf the previous candle, because then it would be bullish engulfing, but it pushes through and closes at least 50% through the body of the previous down day. So that's known as the piercing pattern. So clearly they're not as strong as the engulfing patterns we covered last time around, because you have a much bigger move against the previous day in an engulfing pattern. But it can be, again, a suggestion that maybe things are changing. Okay, so that's the theory of what dark cloud cover and the piercing pattern looks like. Let's take a look at some real markets and see how easy these things are to spot and how they would have performed over recent months. Right, let's just see if we can spot some of these patterns. Let's walk back through this chart first of all. This is oil. And I think actually this is a daily candlestick. This is today's day. This was yesterday's day. I think that is a piercing pattern. That is just about through 50% of the previous day. So again, the market sold off for a couple of days. We have a day, the piercing pattern. So again, maybe the suggestion, it's worked so far that we're going to see something of a rally. You could almost argue actually up here, dark cloud cover. So we've got the green up day. Then we have this down day here that does push through, I think about 50% of the previous day's candle. There's nothing else I can see really down here. Maybe, I think these two sort of candlesticks here, that's maybe not quite 50% where that pushes through. I think that one is just about. That's a piercing pattern there where the market sells off for a couple of days. These are only really short-term trends, of course. Piercing pattern, and the market does rally. And I think if you're going to trade these things, the aggressive way of trading it, if we're a buyer here, the day after the pattern's happened, a stop underneath the low, the low of the previous day. But let's take a look at another market. Okay, this is Euro US dollar on the daily chart. So let's just walk back and see what we've got. I think there's an obvious one here. Again, the market only really drifted for a couple of days, but we have then this big up day that pushes through what looks like about 70-75% of the previous day's candle. So that is a piercing pattern. Again, the trade would be a buyer on the next day with a stop loss under the low there. Nothing much going back here. Maybe some people might see that just about this red candle here pushing through about 50% just about of the previous day's green candle. So a bit of a dark cloud cover there. Let's jump back to here. That looks like an engulfing pattern, engulfs the previous day. So that's not a piercing pattern. That's not really dark cloud cover, didn't push down low enough. And I think that's probably at that for this chart. So they work pretty well in these examples. As usual, they're not going to work all the time. You need to have stop losses in place to take you out if things don't turn out as expected. But you are going to get more of these patterns than you do of the engulfing patterns because they're not quite as strong. So I think they are a bit harder to spot than the bullish and bearish engulfing. That does tend to jump out at you, but because it's technically a weaker pattern, you do see them occurring more often. And personally, for me, I just tend to stick to looking at bullish and bearish engulfing. But for you, maybe if you want to have more signals generated, a more aggressive style of trading, then maybe these two patterns, the dark cloud cover and the piercing pattern, will add something to your own approach. As usual, if you have any questions or comments or something's not clear, just leave us a message in those comments down below. We do read all of them. If you like the video, click on the thumbs up. And as usual, if you're not subscribed, we do lots of different videos throughout the week, looking at euro, dollar, gold, oil, trading terms, cryptocurrencies, all this stuff. So to make sure you never miss out, if you click on the subscribe button there and just make sure that alarm bell notification thing down there is pushed, you'll get notified every time we upload a new video. But for this week, from me, David Jones and Trading 212, we'll leave it there, and I hope you have a good trading week.